Okay, now is it okay?
Yeah, it's better.
Yeah.
Fine, sir.
Right. So we were talking about the globalization, modes of entry, the factors influencing the international business. Then we were talking about the risk analysis, country risk. We have few cases from IMF. This is country report. What they do is they take up a country and analyze the country's perspective in all sectors. So I'll give you that. Okay, I'll share those documents to you. Then we have investment analysis we have made. Okay, that is all net present. Did we complete this investment analysis? I've just given you brief idea of the net present value, the internal rate of return, okay, the profitability index. I think that would suffice because this is not a project finance or capital budgeting, right? But if you want more explanation, more detailing, I can give you. Otherwise, we'll skip this and go ahead. I've just given you the idea of how the investment analysis is made, right? There are some traditional techniques like your profitability index, the net, then payback period, and you have net present value, internal rate of return. Okay, I've given you just the idea, okay, how they are calculated and how the decision is taken by the investors. Okay.
Sir,
uh,
what is index fund, sir?
yeah.
Index fund.
Yeah, index fund is one of the instruments of raising capital from the capital markets. Okay, it is, yeah, we are talking about the international trade, international business. The index funding is from the capital markets, that comes under capital markets, international capital markets. There's a separate course called international capital market. Okay, that's one way of, one source of raising finance for the business. Okay, for the investors, it is an investment and they expect some ROI, rate of return on investment. Okay, for the organizations, it is one way of raising the sources.
Sir.
Okay, then foreign exchange market, then currency. We were talking about the currency. Okay, then slowly jumped into international trade theories, right? About 3 or 4 theories we have been talking about: comparative cost theory, purchasing power parity, Ohlin, Heckscher-Ohlin theory. Okay, we were held up at Heckscher-Ohlin theory, right? If I'm not wrong. Okay, then balance of payment. Balance of payment. Okay, now we'll continue with the balance of payment. And, today we will close with the World Trade Organization. World Trade Organization. Okay, then another 2 topics are left. Okay, if we get time, then if the university schedules some more classes for us, then we will look into those topics.
Yes, sir. Just now, Sarah also told that we have 2 more sessions.
2 more sessions, then we will be sufficient enough.
Yeah,
Yes,
yeah.
sir.
2 sessions will be sufficient enough. Now, look at this. Please do understand. I'm just guiding you how to just go through. It's only a trigger. It is not a full-fledged teaching, right? If it is, if I go with full-fledged teaching, we don't have that much time. I'm just giving you the overview of, okay, the overall bird's eye view of the entire content, course content, right? It is not possible for us to complete in just 4 or 5 classes or even 6 classes the entire syllabus. And this practice is done for you because you're all executives. You don't require a detailed teaching except for some problematic papers, courses. You don't need detailing. Once a trigger is given, you can very well proceed with the your remaining content, course content. Let's say if I just speak for 5 minutes about the balance of payment, as I complete speaking, you get the connecting, connectivity of what I'm going to speak to you for another 40 minutes. That's your level, okay? Unlike students. So therefore, for you, you don't require detailed teaching, right? But if you are a slow learner, okay, you're not restricted from asking the details, okay? Just now somebody asked, and we are here to strongly encourage you to raise your doubt. If I don't know now, I'll verify and tell you. If I know the answer now, I'll speak to you right away. Okay, so by asking a question, you're not losing anything. By asking a doubt for clarification, you're not losing anything. The answer may be on the spot or maybe in the next class, right? Or at least by the WhatsApp, right? So
Yes, sir.
balance of payment is our today's topic. Okay.
Yes,
Now I just want you to have a look at, I was struggling, this Excel sheet for login details. I lost and I was going on searching. Finally, sir had to help me. Then finally I logged in. Right. I just want you to go through this balance of payment just for 5 minutes. Okay. I'll come back to you. And when I come back to you, okay, I'm not going anywhere. I'm here available to you. Okay. As you read, raise the doubts. Okay. Then I'll keep answering your doubts. Okay. I'm not
All
going
right.
anywhere, but I'm giving you time to read it. I'll have a glance on this
Yes.
before we go for full-fledged discussion. Block 3. I think the question paper would be, I think, relatively easy, right? It's going to be easy.
Textbook last model paper given.
Yes, this is balance of payment. Yeah, balance of payment. You keep reading it. Okay, if those who don't have, you can read it here. Those who have the material, you can read from your own material, right? And as you read or have a glance, you keep asking me to scroll up and down. Okay,
Okay, sir.
just have one glance. Why I'm asking you, I should have asked you yesterday itself to go through it and come, so that the discussion is even more fruitful. Can you see your material or did I close it?
We have, sir, material.
We are able to.
Done? Just a bird's eye view. Right, it is done, then I'll continue. Can you see anything?
Yes, sir. PPT.
Yeah. Balance of payment. Okay. What is your idea of balance of payment before I proceed?
Balance of payment is the account where export and import of both visible and invisible items.
Yeah. It is a record of both export and import, both visible and invisible. Visible means, what do you mean?
Visible means it's consumer goods,
Okay.
durables,
Okay.
goods, machinery, etc. And
Okay.
invisible items like services like banking sector, insurance sector, and so on. So
That's excellent. Okay. Okay. Good. Can we understand it this way? Balance of payment is like a balance sheet of a country.
Yes, sir.
Yeah.
yes, sir.
Yes.
It is like balance sheet of a country. Okay, let's look into the details of this balance of payment. Balance of payment. Okay. Uh, Rakesh, are you recording? Rakesh, are you there? Anyone is recording?
He is recording, sir. It is recording.
Okay. Okay. Yeah. From here it's very important. Right. Balance of payment. Balance of payment. Okay. Now, it includes both visible and invisible items. Okay, the physical goods and okay, the services, right? And also the capital transfers. Sometimes they bring in the capital, the FIIs, the foreign institutional investment, the FDI, the foreign direct investment. As I told you earlier, the FIIs are foreign portfolio investment. They participate in the capital markets of the country. Okay, that is FII or FPI. The direct investment is they bring in their money and start business here in the host country. Okay, right. Now, according to Berger, the balance of payment of a country is a systematic record of all economic transactions between residents of reporting country and residents of foreign countries. Okay, during a given period of time, between 1st April 2020 and 31st March 2021. What all happened, okay, with this country and the rest of the world? If you record all that, that's a balance of payment. Okay, it's a systematic record of all economic transactions of India with the rest of the world. India deals with so many countries. The Indian companies deal with so many companies across the globe. It is not just a couple of countries. It's not just one country, but so many countries across the globe. Wherever the business opportunities exist, we deal with, right? So if you're recording for the entire economy, all such transactions from one point of time to another point of time, let's say the point of time is the 1st April of a year, a calendar year, to the 31st day of March of the next calendar year. Okay, that's called financial year in India, right? So between these two dates, whatever happens with your country's transactions with the rest of the world, all such records are recorded. That itself is balance of payment. That's what Berger says. It's a double entry system of record of all transactions between the residents of the country and the rest of the world for a specified period of time. I told you what is that specified period of time. India follows 1st April of this year to the next year's 31st March. That is the specific period of time. Fine. Let's come to another point here. It is double entry system. It is following the double entry system of record. What is double entry? What is double entry? Yes, any idea?
Debiting and crediting, sir.
Two times.
Double entry system. Yeah, if there is a noise, okay, you know, you don't need to unmute, but if you can, without any disturbance, you can answer. Yeah, what is a double entry system? Anybody? Because if I just go on like that without you knowing what is double entry system, then
So double entry system is nothing but a entry which is entered 2 times.
okay,
An entry which consists of both debit and credit
okay,
transaction.
okay,
I think journal and ledger entry, sir.
okay,
It
okay,
has a corresponding and opposite entry.
okay. Yes, when you speak out, okay, I should know what you're speaking is right or wrong. Okay, to know what you're, you know, look at this. I want you to speak, you know, for the reason if
Sir.
you don't speak, you know, the wrong idea that you have, you will think that it is right. When you speak out, then I will confirm that it is wrong. Then I'll. So the correct version, you will again receive it and retain with you. So therefore, you must speak. So therefore, when I correct you, please don't feel bad because it is required. It's required. It's like, you know, when you go to doctor and doctor tells you that, you know, your temperature is 104. Okay, then you need to have this injection. Then don't say the injection is painful. I'm scared of that. So no, don't be scared of being corrected. Okay, that's what when Ambed, you know, I was very impressed with Dr. B.R. Ambedkar from the university whose name, you know, your university is called. I was very impressed. The man who has got half a dozen PhDs, okay, 100 years ago, and this man was standing in the, you know, the assembly, the Constituent Assembly, the first parliament of India, and he was saying, I stand here not to be corrected. I refuse not to be corrected. That means he is open to be corrected. So please don't mind when you are corrected, then you know you have done something fine. No, it is this way.
We can't able to hear you, sir.
Yeah, can you mute yourself? Yeah, Mr. Sandeep, mute yourself. Yeah. Right. Thank you. So, you know, we are here to get corrected by each other. Okay, that's no problem. Right. Now, as Rebecca says, yeah, as all attempts are good. I'm thankful for that. But Rebecca says one beautiful sentence. What is that, madam? Can you repeat it?
Yeah, double entry system has a, every entry has a corresponding and opposite entry.
Every transaction, please remember this, sir. Every transaction has, okay, 2 effects. Okay, if there is one receiver, there is a giver. If there's a giver, there is a receiver. If you're giving donation, you are a giver, right? And who is taking the donation? Somebody, some NGO takes the donation. There is a receiver, okay? So every transaction has 2 effects. There's one debit effect, there's one credit effect. The one who receives the benefit is debited, okay, is a debtor. The one who gives the benefit is a creditor, okay. The credit effect, the one who gets the credit effect, the one who receives that benefit gets the debit effect, okay. So this is what the double entry system. This is introduced by there's a gentleman in 1500 or so, or between 15 and 1600s. There's one gentleman in Italy, that's Luca Pacioli. He introduced this concept of double entry system, and from then onwards, this system changed the business transactions all over the world. And till today, we are following the same system, double entry system, right? And there's no change, there's no need to change also. So this is double entry system. And this balance of payment follows this double entry system. When we say a country's balance of payment, we are referring to the transactions of its citizens and the government, including the government. It is not just the country's companies or the individuals. Okay, it is including governments' dealings with the rest of the world. Okay, a balance of payment of a country is a systematic record of all transactions, economic transactions. Okay, now Mr. Modi went to Pakistan and had a cup of tea. That is not an economic transaction, right? But along with him, if he takes any business deal, that's an economic transaction between residents of India and Pakistan, or between residents of India and the United States. It presents a classified record of all receipts on account of goods exported, goods exported, right? And services rendered or exported, and capital, supplied to the rest of the world, or capital received. Okay, all these are recorded. Import of services, import of goods, import of capital, all these things are recorded in this balance of payment. Okay, this is what the definition given by Reserve Bank of India. Now we will see our balance of payment, current balance of payment also. Okay, we'll go to the RBI after some time. Right. What are the features? What is balance of payment? Discuss its features. This is how you have to answer. It's a systematic, how do you get these features? You just split this paragraph syllable by syllable. You break it into pieces. Then it becomes features. It's a systematic record of all economic transactions between one country and the rest of the world. It includes all transactions, visible as well as invisible. It includes the trade goods and goods in trade and goods in services in trade. Okay. It relates to a period of time. There's a period specified, right? 12 months, or it may be quarterly, half yearly. You can also calculate that way or prepare that way. Generally, it is annual statement, but you can prepare annual, quarterly also. It adopts a double entry system. It has two sides, two effects, double, credit effect and debit effect, right? While receipts are recorded on the credit side, and the payments are on the debit side. Payments are on the debit side. Okay. Now look at this one. Look at this. All those who have done accounting, receipts are recorded on the credit side. What is this? It follows the nominal account. In accounting, for the people who have not done accounting and for the people who are engineers, basically, right? Let me tell you, the entire, all these transactions, business world, all the transactions, they have grouped into three types of categories. Number one is a personal account. Okay, one category is personal account. Person means it is both individuals created by God, by nature, by God. Then artificial persons created by the law of the land. So when it is personal account, it is belonging both to the artificial person and the natural person, who are created by God. Okay, so in case of personal account, the rule is debit the receivers, credit the giver. Debit the receiver, credit the giver. Now you have real account. The rule for real account is you can excuse me. Yeah, the rule for real account is you can debit all the incomings debit what comes in and credit what goes out. What is this real account? Real account relates to the assets that you can see really, okay, tangible assets, real account. When asset is purchased, debit, it comes in, debit what comes in. When an asset is sold, you credit it because it goes out, okay? And lastly, nominal account, debit all expenses and losses, credit all incomes and gains. Come again, debit all expenses and losses, credit all incomes and gains. This is for nominal account. And profit and loss account is one of the examples of a nominal account, right? And this particular balance of payment follows the nominal account rule. Look at this: debit all expenses, credit all incomes, or credit all, receipts are all incomes, right? Credit all incomes, receipts, okay? And debit all payments. The payments are to be debited. Debit all payments and credit all receipts, right? So this is the rule of nominal account, okay, of double entry system, double entry bookkeeping system. Fine. Right. Balance of trade. This is interesting. Balance of payment, balance of trade. Balance of payment is systematic record of goods and services of one country with the rest of the world. Okay. Then what is balance of trade? Balance of trade. Balance of trade is part of balance of payment. It is subset. Balance of BOT, balance of trade, is subset of balance of payments. Okay, what's the difference? The difference is, okay, the difference is, this is dealing with what this balance of trade is dealing with only the exports and imports, only exports and imports. It maintains the record of only exports and imports of goods in trade and services. Okay. Now, what's the procedure? The procedure is debit all imports. Okay, debit all imports, foreign aid, domestic spending abroad, and domestic investment abroad. Domestic spending abroad. Okay, domestic investment abroad. I take my money and invest in Uganda. I take some money and do a shopping in Dubai. Okay, Dubai fellow gets the income. Whose money is that? That's my money that I have earned in India, right? So what do they do? This Dubai, Singapore, Bangkok, all these Malaysia, Kuala Lumpur, these people and some of the European countries, they attract us to come and spend in their economies, right? This is your money spent abroad. Okay, spending abroad, domestic spending abroad. The domestic income earned, or the income earned domestically, spent abroad. That's what the meaning here, right? Domestic income spent abroad. Okay, and I've got some excessive money, okay, from this company in India, and I'm trying to invest in other country. Earlier, okay, there should not be any ant coming in, not an ant going out. Till Manmohan Singh initiated this liberalization process. Okay, there was no money coming in, there was no money going out. And people were just sealed from being exposed to the rest of the world. That was a closed economy for a quite long time. But now the scenario is changed. Fine. Debit. Okay, debit all these imports and your spending abroad or investment abroad. Credit includes, okay, credit all exports. Okay, foreign spending in domestic economy. Foreigners come and spend here. They will come and spend time generally till this Dubai and Singapore were developed. Before that, people used to come to India, right? Goa. And compared to even now, there are many people who come to Goa because when the temperatures dip below 20 degrees, minus 20 degrees, it is, they don't even get drinking water. Everything is freezed. The water is freeze. Everywhere you will find ice, ice, ice. Okay. So they come here and spend, a couple of months in India, right? Those who cannot afford those destinations, they come and spend here. When they come and spend here, what is that? That's an income for India. That's to be credited, right? When you export goods, what do you get? You get foreign currency, right? That's an income that's credited. So credit all the incomes, okay, and debit all the expenses, the nominal account rule. When exports are greater than imports, the balance of trade is favorable. And if imports are greater than exports, it is unfavorable. When imports are greater, what does it mean? You paid more than what you have received through your exports. You paid more for your imports than what you have received through your export. What is that? That's unfavorable. Unfavorable balance of trade. But by contrast, if you have received more income through exports and tourism, okay, then balance of trade is called as or considered to be favorable because your income is more than your expense. Okay, as a country, I'm saying, not as an individual, right? So the difference, balance of payment takes into account all transactions, right? While it is taking only, while it is taking into account only the trade transactions. Okay, therefore I said the balance of trade is a subset of balance of payment. Balance of trade is part of balance of payment. It is subset. It is part of that statement. Okay, we will see the real one. Okay, now it is a broader term, balance of payment, and balance of trade is a narrow term. It includes all transactions related, both visible, invisible, and capital transfers, balance of payment. It includes only the visible of trade, goods in trade. Okay, right? And it is always balance of payment always balances, but the balance of trade can be positive or negative. And look at the equation of balance of payment. Current account, the capital account, okay, plus or minus balancing item. Okay, this is plus or minus balancing item. Okay, balancing figures, right? The current account itself is called as balance of trade. Okay, right, look at this. Balance of trade is equal to net earnings on the exports, net payments on the imports. Income from exports minus expenses for imports is balance of trade. Okay, that itself is a current account. The current account can be both negative or positive, right? Then, yeah, these are the conditions for conditions of foreign lenders. Factors influencing the balance of payment. These are the factors. Okay, all factors influencing balance of trade will be influencing the balance of payment also, right? The economic policy of the government is one of the influential factors, and conditions of the behavioral patterns of the people in the foreign countries, the lenders. Okay, then when it comes to balance of trade, it is the cost of production, it is the availability of raw material, and it is the exchange rate, and it is price for the finished goods available in the international market. These are the factors influencing balance of trade. And when you come to balance of payment, in addition to these conditions of balance of trade, two more conditions are to be fulfilled. Okay, two more conditions, right? So these are the differences, major differences between balance of trade and balance of payment. The importance of balance of payment. Importance of balance of payment. It's a systematic record, right? It's a systematic record. Yeah, you have a record for future reference. Then based on this balance of payment, okay, you can judge the financial health of the economy, right? And you can also judge the strength of the international trade of a country or an economy. And this may also indicate shift in the, uh, monetary policy of the RBI. BOP is, is a barometer like, okay, to predict the trends in the international trade of a country. Okay, and this may also indicate the reversal trends, okay, declining trends also. General rule in balance of payment accounting. If a transaction earns foreign currency for the nation, a particular transaction, one transaction, it is credit and it is recorded as a plus item. Remember this, we are going very slow. There's a transaction and that is an export. Okay, that is an export, right? And that export earns some foreign currency. Then if it earns a foreign currency, that is a credit. Okay, when it is a credit, you just take it as a add item. If a transaction involves spending of foreign currency, right? You go to the European trip, Schengen visa you take, and 15 countries you want to roam around, right? And what do? You take some Indian rupees, then spend there by taking the foreign currency from India. All right, what is this? It involves spending of foreign currency. It's a debit and it is recorded as a negative item. It is not a plus item, it is a minus item. Okay, then what are the components? This is the rule. These are the rules of balance of payment. And what are the components of BOP? Current account, capital account, reserve account, errors and omission. Okay, if there are any adjustments, that is what this errors and omissions. These are two main components, and you may go to the reserve account also. Okay, these are the three main, and this is to adjust the balance of payment. Current account balance. Okay, it's a statement of receipts and payments in a short period. It includes the export and import of both visible and invisible goods. And they can be, either positive or negative current account. As I told you, the balance of trade, it is also called as balance of trade, right? The current account includes export and import of services, interest, profits, dividends, okay, and unilateral receipts, payments from and to abroad. Balance of payment on current account refers to inclusion of three balances of, namely merchandise balance, service balance, unilateral transfers. Africa is in need of vaccine. America, without expecting anything, it sanctions $10 million. What is that? That's a unilateral transfer. Okay, including such unilateral transfers and services and merchandise. If you take all that, that's a current account. And types of balances: trade balance, merchandise exports minus import of goods; service, export of services minus import of services. Okay, income balance: net investment income, net income receipts from assets, net international compensation to employees, net compensation of employees. Okay, this is net income. Net unilateral transfers: I may be gifting to so many countries, and I also may be gifted, right? The net of that is net unilateral transfers. Let's say I may supply some foods or vaccine to Sri Lanka, okay? But I'm also getting some supplies from, United Kingdom, France, America, okay? So what is a net of unilateral transfer? I have given 1,000 crores, okay? I got 10,000 crores. The net is 9,000 crores. Right, capital account. What is this capital account? It records all the international transactions that involve a resident of country concerned changing either his assets with or his liabilities to a resident of another country. Transactions in the capital account reflects a change in the stock, either assets or liabilities. It is a difference between receipts and payments on account of capital account. It refers to all financial transactions. The capital account involves inflow of capitals and in outflow of capitals, okay, relating to the investors, the borrowers, the lenders, right? And this can be medium to long term in nature. What is included in capital account? Okay, the capital account includes the private foreign loan, okay, movement in banking capital, official capital transactions, gold movement, and so forth, right? And all these transactions are divided into three major categories: direct foreign investment, portfolio investment, and other capital transactions, as I told you. The difference can be, okay, there can be a difference if the difference is positive surplus. What is the indication, right? Your capital flows or inflows are more than the outflows. If the outflows are more than the inflows, then that's a deficit capital account. Okay, so three accounts: IMF, okay, SDR, and reserve and monetary goal are collectively called as the reserve account. Okay, uh, special drawing rights, SDR. Okay, SDR means special drawing rights. All right. What is this? You contribute as an economy, as a member country, you contribute to the capital of the IMF and the IBRD. What is IBRD? The International Bank for Reconstruction and Development. That's also called as the World Bank. You contribute to the World Bank. You contribute to the Asian Development Bank, right? As capital, you pull up along with all other nations, right? And you withdraw some amount from them. Okay, you withdraw some amount from that special drawing rights from such funds. Okay, so the IMF account contains purchase and repurchase from international monetary funds. The special drawing rights are a reserve assets created by IMF and allocated from time to time to the member countries. I pulled up and I have the flexibility of withdrawing. When I'm withdrawing, what happens? I always tell you this thing. When your money is with others, that's a liability. When your money is with others, that's an asset. If others' money is with you, that's a liability, right? Okay, and don't keep others' money with you. That's a liability. That's an obligation that you have to meet at any point of time, right? So be careful. But if your money is with others, be confident, be strong, because you have an asset if your money is with others. At any time, you may demand it, right? But if others' money is with you, you may be at risk. But because if it demands, you don't have the ability or capacity to pay, you're in trouble, right? So it is better to have your money with others than others' money with you, right? Okay, the difference between the payments is, you have subscribed and you have also withdrawn. The difference can be positive or negative. What is that? Positive. If you have drawn less than what you have contributed, that's positive. If you have drawn more than what you have contributed, that's negative. Then lastly, the errors and omissions. Okay, all these things are part of the reserve account, right? These are all part of the reserve account. Now, you have errors and omissions. The entries under this head relate to mainly to, leaks and lags in the reporting of transactions. Okay, lately you may be posting some entries, and due to which there may be mismatch. Okay, then you have to adjust those figures. What happens when when an accountant goes to the chartered accountant, who is the general manager of the company or the vice president of the company, so the balance sheet is not getting tallied. Okay, there's a difference. How much is the difference? There's a difference of two and a half lakhs. Although 2.5 lakhs is a big amount for an individual, for a company of 1,000 crores turnover, 250,000 is very less amount, right? So this is because of lag in the reporting of the transaction. So do some adjustment. Okay, right. This is a modal balance of payment. These are receipts. Okay, these are the payments. You receive the goods when you export goods. You receive money. You receive money when you export goods, income. Then you have to make payment when you export goods. Okay. Then trade account. Okay, trade account balance. All right, look at this. Export of services, interest, and unilateral receipts. Then import of services, interest, and unilateral payments. Then current account balance. Foreign investment. Yeah, foreign investment. Then short-term borrowings, medium and long-term borrowings, investment in abroad, short-term lending, right? These are the payments and these are the receipts, all right? Next is your total receipts. Change, this ninth one is this point, errors and omission, right? And the resource and surplus, reserves account. The resource account, yeah, the resource account is yeah, it is an annex to the capital account balance. Disequilibrium in the balance of payment. Disequilibrium in the balance of payment. What is disequilibrium? It can be either condition of deficit or surplus. A surplus in the balance of payment occurs when total receipts exceed total payments to the world. Okay, credit is greater than the debit in the balance of payment. That is the surplus. Deficit, okay, it is the opposite. The credit is less than the debit. Okay, what causes the balance of payment to have, okay, unbalanced statement or disequilibrium, get into disequilibrium? It may be due to cyclical fluctuations in the market. Cyclical fluctuations, right? Prosperity, okay, declining, depression, reviving, then prosperity. Because of such cyclical, cyclical fluctuations, then the BOP may get affected. Shortfall in the exports, right? I told you, tobacco, people stopped buying, okay, and they stopped consuming tobacco, right? That's shortfall in the export of tobacco. The BOP may be affected. Fine, what else? People, the Western countries are looking at China for the software than from India. Let's say, that's not possible because we are very strong in software and China can never compete with India in that front. But for example, if China is able to provide software also, then that is shortfall in the exports for India, right? Software export. Then economic development also. Economic development is another reason. The growth rate is in single digit, and that single digit also is very, very disappointing for India for the last couple of years. Then structural changes also may be major reason. If your ours is a socialistic economy, in the sense it is neither capitalistic economy nor communistic economy. We are in between. Okay, we want good things of communism, we want good things of capitalism. We are both, and we call ourselves socialistic economy, right? The socialistic economy is aiming only in the welfare of the people of the country, right? And if that is the case, for some time it was the government which was providing the jobs, okay, but in the due course, what happened? There's a structural change. The percentage of government jobs have come down to single digit in the total employment compared to the private employment. What is this? Is it not an indication of shifting the economy from socialistic to the capitalistic culture, towards capitalistic culture, wherein customer is the king? Is it not structural change in the economy? And will it not affect the BOP? Yes, it affected the BOP favorably for India. Then natural calamities also, blow after blow, China is being, hit, and even the Europe was the worst hit, area, okay, worst hit, geographical region with the pandemic COVID-19. And now today, it is the floods, natural disasters, which are troubling them so much. And just before coming to the class, I was just looking into the fate of the rural Germany, okay? And the situation is so grave, there's no power. and there's no food to eat, and they're just surviving. That's it. That's it. Right? That's natural calamity. International capital movements. International capital movements also cause the disequilibrium. Disequilibrium can be favorable or unfavorable for the economy, right? And some of these factors, some of these causing factors may result in surplus BOP or maybe deficit BOP. Not necessarily with negative or deficit BOP. It can result in positive disequilibrium, that's surplus. Okay. Now, how do you tackle with this disequilibrium of BOP? What measures do you take? As a government, okay, it has monetary policy as its whip, okay, through RBI, the RBI, the central bank for the country, Reserve Bank of India, uses the whip, okay, called monetary policy. The monetary policy is concerned with money supply, right, in the country, and credit in the economy. It's also not just money supply, it's also controller of the credit. How the bank can control the credit. You know, when the RBI, the central bank, raises the bank rate, what is that? The rate at which the central bank lends to the commercial bank. When that rate is hiked, what happens? The commercial banks are compelled or forced to raise their interest rates. Why? Because they borrow from RBI, and at higher rate, if they are borrowing, at higher rate they have to lend. When higher rate of interest is introduced in the market, what happens? Very few people take hold, borrow money from the commercial banks. When few people are coming forward to take money, that's how the money circulation is controlled. The credit control is, organized by the RBI in the country, in the economy. Okay, that's credit control mechanism. Hike the bank rate, that's it. All the money that is in the economy comes back to the commercial banks, then finally to the RBI. Okay, the central bank may expand or contract the money supply. That's what I'm saying. In the economy through appropriate measures like this, bank rate. Then fiscal policy of the government, which deals with the income and expenditure of the government. Okay. There are non-developmental expenses and development expenses. It gets income through taxation and non-tax sources, depending on the situation. And the government expense, look at this. It has fiscal policy, means it has means and ways to raise the money revenue for the administration. And it also has ways and means to cut the expenditure. All right. This also results in disequilibrium in balance of payment. Then exchange rate depreciation. Exchange rate depreciation. What is this? Devaluation is one of the measures. What is devaluation? If you reduce your rupee value against the foreign countries' currencies, what happens? They will be encouraged to buy more and more of Indian products because the Indian products become cheap. When that happens, the exports increase. When exports increase, what happens? Income flows into the economy. As a result, the BOP results in the favorable balance. Okay, surplus BOP we will get. Okay, now, I'm sorry, I'm just going on speaking. Would you please ask me any doubts till here? Yeah, in any of the, yeah, I'm sorry, I'm not giving pause without giving any pause. I'm going. Yeah, please ask me doubts. Yes, please. Any doubts?
Sir, we don't have.
Any doubts in any of these slides, points?
No, sir.
No, sir.
Sir, what is the impact of devaluation, sir?
Devaluation. What is devaluation? Devaluation of currency, right? Devaluation of currency.
Yes,
okay. Now,
Does it mean that we need to reduce the price of the product, or how it will be done?
No. Currency value is revalued, devalued.
Suppose now current 1 INR equal to USD 75. I mean, I need to purchase 1 USD. I need to spend 75 rupees. In the similar case, we need to reduce that. How it will be done?
Look at this. Look at this sentence. Devaluation is lowering exchange value of official currency. For us, it is rupee. Na?
Yes.
When a country devalues its currency, rupee, exports become cheaper. Your answer.
Okay.
Exports become cheaper. Let's say, what's the product that we sell? You know, what's the important major products? Any example you can take up. One important. Any of you need not be.
So majorly we are exporting rice.
Rice. Okay. Basmati rice. Shall we take basmati rice?
Yeah.
Okay. Now, instead of consuming basmati rice, they have the alternative, right? Wheat products they can consume. Okay. Next to rice, wheat is the staple food.
Okay.
And when rice price increases, how it increases? You know, when your rupee was 60 rupees and rupee now is 75 rupees.
Yes.
That means for let's say when it was 60 rupees, when it was 60 rupees, let us say we are selling our rice at, let's say, 50 rupees. 50 rupees. Rupees, sir. Rupees.
Yes.
And when we are selling basmati rice at 50 rupees, we have to convert into dollars. Okay, when you convert into dollars, how many dollars it will be to buy 5 kilograms of basmati rice? 5 into 50, 250 rupees. Okay, Indian rupees. Okay, 250 rupees.
Yeah.
250 rupees by 60. How much? 250 by 60.
4 something, sir. 4.
4. Okay, $4 approximately, plus or minus. $4 they have to pay earlier.
Yeah.
Okay, now the same 250 for us, for the Indian exporter, it is 250 only still. But because the country, the government has taken a decision to lower the currency value against the dollar, what happens? It has become 75 each dollar. Earlier 60 each dollar, now 75 each dollar. As a result, what happens? As a result,
3.5 something, sir.
yeah, 250 by 75. 250 by 75, how much?
3.5 something.
$3.5. So earlier he was hesitating to spend because it was $4. Now it has come down to $3.5 only, na?
Yes.
So then when the price for him comes down, then he's encouraged to buy more of, he'll think of shifting his food habit and then think of buying rice, right? He will buy rice. And when he starts buying, just one example I'm saying, when people like that, they start buying, when they start buying, and our exports will be increasing. And when exports are increasing, on all those exports, we get the foreign currency, na? Those many dollars we get. Okay, that is how it impacts, the valuation impacts. It appears stupid to devalue the rupee, but for the government, there is no option but to do this so that we earn more currency, foreign exchange. Unless we earn the foreign exchange, we cannot run the government internationally, globally, because there are many things we need to buy for the country, many things, starting from arms and ammunition to so many drugs, so many vital drugs we need to buy for the country. Okay, so we cannot run the government, we cannot. Okay, and we also had to pay our salaries for the diplomats, right? So all this is in foreign currency only. Okay, so this is how it affects the BOP favorably. Devaluation affects the BOP favorably, results in surplus of the BOP, right? Yes, any more questions?
No, sir.
Okay.
Sir, if we do too much over devaluation, sir, what it can result?
Yeah, that's what, one of our uncles, he was telling. When I went to the United States first time, he said, the dollar rupee exchange was just 4 rupees 50 paise, he said. 4 rupees 50 paise equal to $1. Okay, 4 rupees 50 paise. Now, imagine where is 75, where is 4.5 rupees? In the span of 50 years, he has been there for the last 50 years. Okay, in a span of 50 years, okay, the price has gone up to 71 rupees. Each dollar has gone up to 71 rupees. To that extent, it is devalued. Okay, and too much of devaluation. ఇప్పుడు ఎలా అంటే ఇతరులకు గౌరవం ఇవ్వాలి, అలా అని ఆత్మాభిమానాన్ని చంపుకోని అవసరం లేదు కదా. Do you agree with me?
Yes, sir. Yes, sir.
Yes, sir.
ఎదుటివాడికి మర్యాద ఇవ్వాలి, ఎందుకంటే అతను కూడా మనలాగా ఇండివిజువల్ కాబట్టి. అలాగనే ఆత్మాభిమానాన్ని చంపుకోలేం కదా. Okay, you have to maintain the balance. Okay, you cannot just ruthlessly without any wisdom. You have to, that's what I was watching to the interview of Raghuram Rajan. Oh, that's a thorough economist. He was telling, economics is such a subject. Even this comes under economics, international business. Economics is such a subject. As an RBI governor, he was telling that if you touch one variable, you don't know how the other variables behave. They may misbehave, they may behave properly, right? That one word speaks volumes. You can write sheets and read sheets just on that statement. And I have been going through, in light of that sentence, so much of material, okay? And you can do so much research on just one small word that is spoken by that economist. Economics is such a subject where you touch one variable, you touch currency devaluation, currency, and try to devalue it beyond its a tolerable limit. That's it. You are going to invite a disaster on the economy. Be careful. Be careful. That's what happened, even with the demonetization process. That's a very, very crucial step. Should have been done with a lot of care and with a lot of homework. Okay, but that was done without any preparation and homework. Okay, and we have seen the effects for years. Even till now, we have not recovered fully with such step, right? So you can't touch any of the variables. It's very dangerous. It is, by devaluing you can import, you can increase imports. That's okay. But as our Kiran said, can you increase to any level so that we can import goods and we can export goods and to the whole world? No. Atma abhimananni champukona avasaram ledhu. Okay, you have to maintain the dignity of your economy. Okay, that's very important. Then exchange rate, deflation. What is deflation? Inflation opposite to inflation. Okay, it's reduction in the quantity of money. Inflation is too much supply of money into the economy. Deflation is reduction in the quantity of money supply. Why do you want it? You want to cut the circulation of air. Can you just mute yourself? We're unmuted. Okay, I request you to mute yourself. Okay, yeah. So then exchange control. All exports are directed to the monetary authority. Okay, exchange control. If you're importing, you must approach us, okay, to make the payment for all your imports. When you're exporting, you must surrender all the proceeds from the exports with us, right? It is the RBI which takes care of this, okay? Through dealers, through commercial banks. In commercial bank, there's one department which deals with exchange, okay, foreign exchange. And the RBI continuously, can you believe, on daily basis, RBI monitors. For example, if I'm remitting some money, okay, immediately he enters that entry will send an alert at the RBI. And unless the RBI approves, I cannot send money. To this extent, the monitoring takes place. This is what exchange control. How much currency, foreign currency has flown in, how much foreign currency is flowing out, all that is accounted for. And accordingly, the BOP is controlled. Then these are all monetary, okay? That's through the RBI. And non-monetary controlling measures also there. What are they? Through promotion of exports. Okay, and through, by discouraging the import. Hey, look at this. You want a motor car, right? Ford? No. You don't need to buy Ford. Equivalent to that, or we will bring the Ford company here, right? In Madras, the plant is set up. You can buy from here instead of importing directly from other countries. You don't need to import. Okay, this is import substitution. Then export promotion. There are many SECs, special economic zones, set up only to encourage the export-oriented goods. They are called as export-oriented units. Okay, EOUs. And they have got tax holiday. Okay, for 10 years, you don't need to pay tax for 10 years, right? On all the earnings on such units. And then the land is given freely, and the capital incentives also are given, like subsidies given for the if there's a bank finance and the government supplies its own share. So these are all export promotional measures. If you are producing goods which are export oriented, not to sell within the country but to export. Okay, so in addition to that, you may sometimes reduce the export duties. And there's one agency called ECGC, Export Credit Guarantee Corporation, right? ECGC is one of the agencies, to import all financial needs, whether it is issuing letter of credit or giving letter of credit or accepting letter of credit. Credit guarantee schemes, all that are taken by ECGC, right? Then measures to correct equilibrium, like quotas, tariffs. Okay, this is import control. I told you this quotas already. Okay, if it costs 100 rupees, they will levy tax 120% of what I have paid outside. If I'm purchasing a pen and I want to bring it to India, and if the pen costs $10, it will be charged $12 as import duty. That means my pen costs $22 instead of $10. And as a result, what happens? I will be discouraged from importing. That's import quotas, right? Tariffs also, duties also, all these, whatever you call it, some or the other way, you are restricting the flow of goods from other countries, right? Now let's look at India's balance of payment. Now we will look at India's balance of payment. Okay, right. Now I will just take you to this is because such a country requires import of machines, technology. Look at this. This is the balance of payment for India. Okay, you have current account, you have services, primary income, and secondary income. Okay, then I'll just take you to Can you see my screen? No?
Yes, sir.
Yes, sir.
You can still see my screen?
Yeah.
Okay. Let me get take you to the RBI and show you the balance of payment of the country now, currently.
Sir, it is struck at the PPT, sir.
The PPT is struck?
Or is it designed, sir?
Sir,
We could see only reasons for poor performance of India's export trade. That slide we are seeing. We are able to.
Okay, okay. Just give me a couple of minutes, okay?
Sure, sir, sure.
Those who are recording, just put it as a, pause till I come back. Yeah. Where am I? Can you see my screen?
Yes, sir.
Yeah, balance of payment. Okay, 21, 22. Okay, and this is balance of payment for 2021. Let's look at, okay, for the last 3 years, we'll see. Okay, 5 years, it will take so much time. 3 years, quickly, we'll have a glance of the balance of payment. Okay, yeah, April, June 2019. We'll remember this, April to June 2019. Can you see this screen?
Yes, sir.
No, the Excel sheet.
No, sir.
No, sir.
You can't see the Excel. You can't see?
No,
No,
sir.
sir. It may be opened in background, sir.
Can you see anything?
It's blurrer, sir.
It's blur. Okay. Okay. You can see this April, June 2019. Can you see this?
No, sir.
Sir, please share the screen, sir. It is large.
Oh, I'm not sharing. Okay. Yeah, it's open and hiding somewhere. Okay, got it, sir. Yeah, am I sharing now?
Yes, sir.
This is actual balance of payment, the real one. Right. This is the current account. Okay, this is the current account. Right, see current account, 1A, 1B, 1C. Okay, 1A, 1B, 1C. All right, now goods and services. 1A and 1AB. 1AA, 1AAB. Right? This is, yeah, this is okay. Yeah, this is goods in, this is simply goods, merchandise goods. Okay, this is simply merchandise goods. Okay. Yeah. From here, from here, okay, till here, they're all merchandise goods. Okay, look at the scenario. Okay, in April to June 2019, and compare it with 2018. What was the scenario of current account? Okay, when compared to 2018, it was 1,71,530 crores, 530 US million dollars, US million dollars. Okay, 171 530 US million dollars. This is the current account, right? Then look at this. The same thing is 1,60,686 US million dollars, right? Now you can just imagine, you can think of this. It is a decline. There's a decline, continuous decline. You can take up a project work on this also. If you're doing still in the process of project work, you can take a project work on this also. How, the current account has been declining. You'll get a beautiful graph also. You can explain in more detail. Then what is the reason for this current account decline from 171,530 to 160,686, right? The reason can be traced with all these things, right? Because of these goods, look at this. It was 8,443. What is this? Non-monetary gold was 8,443. Now, in this year, there is no non-monetary gold. Okay, last year it was 8,443. There is no gold here, right? And it was 1,20,697. What is that? General merchandise. General merchandise 1,20,697. I'm sorry, 8,45,000. Sorry, yeah, these are quarters, different quarters. I'm comparing this quarter. Okay, I'm comparing this quarter with this quarter. Okay, so 84,567 it was. Now it is 82,207. When you compare, you will get a percentage, and you will also get a graph curve, right? And based on that, you can go on explaining your analysis, right? Then this is goods and services, right? Services. Then you have, if you go through the services, look at this: transport, passenger, sea transport, passenger transport, freight, and other. Air transport, right? Passenger, air again, passenger transport, freight, and other. Sea transport, the categorization, air transport, categorization, and other modes of transportation. All these are services. Okay. Travels like business travel, personal travel, okay, and all educational related travels, right? Then construction abroad, construction in the reporting country. Then you have insurance and pension services, right? Now some of the foreign countries insurance companies may come here, right? Our companies may be entering into MOUs. These are all services. Okay, services, right? Then finally, we'll just look at the total. And then in addition to that, you have capital account, right? Look at this. In addition to the goods and services, first part is goods, okay, right? Till here only it is goods, and the rest all are services. That means we are growing, we are providing more of services than more of export of goods, right? Including financial services, right? Then we have capital flows. Where is that? You just go through, and as I'm scrolling, you can stop me if you want to see something, right? These are all services. Okay, services. Then capital account. Capital account. What is there in capital account? Capital transfers, general government transfers, and debt forgiveness. Okay, you have given the loan and you have forgiven that. Or likewise, other countries' governments, sanction a loan and they may forgive it. Okay, they may strike it off, right? That is also all that put together. Okay, all that put together is yeah, 76,075, and there's nothing here. Debt forgiveness. There's no debt forgiveness. This is a very rare phenomenon. Okay, and this is, we can't depend on this. It is their wish, of our wish to forgive or not. Then financial account. Then investments. Direct investment. Okay, direct investment in India and direct investment outside India. That means direct investment by India. Like if Bank of America comes and sets up their company, that's direct investment in India. Okay, direct investment by India. The NCL or the, this, what is this? Or Tata's go out and take up the projects outside the country. That is direct investment by India. Portfolio investment, I told you, portfolio investment. They come and participate in the shares of the country. Portfolio investment in India, okay? Then portfolio investment by India. Our people also subscribe to the shares of New York Stock Exchange, okay, Tokyo Stock Exchange, and okay, things like that. Then ADRs and GDRs, okay, American Deposit Receipts and Global Deposit Receipts, okay. All right. Then finally, the errors and omissions. Errors and omissions, right? Now, total assets and liabilities. How much? How much? 1,40,946. Total assets and liabilities. Okay. Total assets and liabilities, 1,41,000. And there are some adjustments, and those adjustments are $447 million. Okay, $447 million. Now, what I want you to look at is yeah, 142 in April to June 2018, assets and liabilities total. Now it is 140. There is a decline. Now let's look into, this is 19, right? Let's look into the 2020. Yeah, let's look into 2020 RBI balance of payment. Sir, am I sharing with you?
No, sir. Yeah.
Yes, sir.
Yes.
Yeah, now look at this. Yeah, goods, okay, services, then including construction service, then capital account, then miscellaneous. All right. Now, lastly, we'll just see the total. See the total. The total of assets and liabilities is 127,836. 127,836. And the same thing last year, October. Compared to October, it is better. Compared to October, better. No, October, December 2020. April, June 2020.
Sir, there is PR and P, sir. What is the difference? April, June 2020 PR. And in last April to December 2020.
Payments and receipts.
Okay, sir.
Yeah, this one is showing April. It is showing the latest one. April, June. Okay, 19th we have seen. Na? What was 19? 122. Now it is 127. Yeah, I remember that. 122. I thought it will show it here. Okay, I've taken the current one, latest one. So 127. That means there's an improvement compared to last year. The balance of payment has improved by 5,000 change, 5,000 US million dollars. It is improved. That's a good sign. That's a good sign. That means we have survived economically from the pandemic, or we are just slowly recovering economically, financially as a country from this pandemic. That's the thing. Last one it was 122. Now it is 127 during the same time. During the same period, April, June 2019, it was 122. Now it is 127. That means we have improved our foreign exchange. Our balance of payment is showing a favorable balance. It is not negative balance. Okay. It is showing negative balance. It is showing negative balance. Do correct me if I'm wrong. Okay. In my analysis, in terms of credit. Okay, in terms of credit only, it has improved. Yeah, this is the correction you must have made. Yeah, in terms of credit, but in terms of, okay, the net, it is minus 17,856 negative balance of payment. That means our imports are more than the exports. That's an indication. Our imports are more than the exports. Look at this. Let's come back to this. This says you must quit that. Only then I will open. Yeah. They're mutually exclusive. They're mutually exclusive. Unless you close that, I will not come like this. Yes. Yeah, this is 19, April, June 19. Okay. And look at this. Yeah. Net. Okay, I'm not sharing with you. Yeah. Look at this. Yeah, the credits. Okay. The credits are through imports, right? All right. Oh, not 122. It is 140. Yeah, credits are 140 and debits are 126. No. Yeah, we have not revived. It is 14,692. It was positive. Last year it was positive. Our foreign exchange reserve, $14,692 million. Remember this, $14,692 million positive. It is not negative. It is not negative. Okay. Then let us come to let us come to another statement. Yeah, look at this. Am I sharing?
Yes, sir.
Yeah, 14,000. Now it is 17,856 negative.
It's taking time to.
Huh?
It's taking time to visible. It's still loading.
It's still loading. Huh? Okay.
We can't see the Excel sheet.
Okay. Can you see it?
No.
No, sir.
Can you see it?
Yes, sir.
Yes,
Yes,
sir.
sir. Right now.
It was 14,000 in for 20. For 19 it was 14,000 positive. Now this is 17,000 negative. Net I'm talking about. There is a debit, there is a credit. What is credit? What is debit? Every time the foreign exchange flows into the country, it is credited. Every time the foreign exchange flows out of the country, it is debited. It flows through merchandise. When you sell physical goods, it flows into when you sell services. It flows into when other governments give us money. It flows into when the foreign direct investment or portfolio investment comes into the economy. All these are credits. Opposite to this is debit. Okay. Now last year it was 14,656 or 856 change. Okay, 636 or whatever it is around 14,000 foreign exchange. Now it is minus 17,856. That means the foreign exchange reserves are going down. Look at this. That is positive 14,000. It is negative 17,000. Right?
Yes.
You can also, I'll just share the link in the chat box. Go through these balance of payment sheets, and this you can also do a project on this. Okay, I'll just right now I'll just share the link. Okay, just give me time. You go through all these things in detail. We don't have enough time to get into each and every detail of this. All right, just go through this. Yeah. Can you see it? Can you? Yeah. You can just click on this. It will take you to the statistics of Reserve Bank of India. Okay, click and just check if it is opening, and open it at your leisure time, and just spend 2-3 hours on this. You will get the idea for your project report. Okay, summer internship report. Right. Any questions, please? We'll stop here. Any questions? No questions?
No, sir.
Is this topic is coming on examination point of view, sir?
Balance of payment. What is balance of payment? What are the components of balance of payment? Discuss its features.
Theory, sir.
Theory.
Okay.
Theory. And what is balance of trade? In what way it is different from balance of payment?
Sir, do you have any case study in?
Case study also. You can also get a case study on balance of payment.
Okay.
You can also, it is not ruled out. You may also get a case study on. Okay. If you go through these Excel sheets of RBI, you will get complete grip of BOP.
Okay.
Okay, sir.
And also go through the material. And refer back to the material. And still, if it is confusing, then you can just leave a message to me. I will revert back.
Sure, sir. Thank you.
Okay. Thank you all. Good day. Take care.
Thank you, sir. Bye, sir.
Thank you, sir.
Yes, sir.
Thank you all.